back to another episode of StablePod, a podcast where we host conversations with the individuals who are shaping the future of decentralized systems. I'm your host, Juan Esquivel. Today's guest is finding new ways to give DeFi users easier access to the best yields. Chris Bradbury is the CEO of SummerFi, a DeFi yield optimizer and a key contributor to the recently launched Lazy Summer protocol. In our conversation, we touch on the evolution from Oasis to SummerFi and more recently, the Lazy Summer protocol, the main user feedback points given to the Summer team that led to the development of this new protocol, how SummerDAO governance is set up and the inspiration behind it. And we talk about all of this and much, much more. I'm joined as always by my lovely co-host, Gustav Ehrentoft. Gustav, what did you make of our conversation with Chris?
Yeah, I think Chris, he has like a lot of really great insights into, not just how like the yield in DeFi is shaping as an industry and how they build Summer to target that. But also, he's a product founder, right? So Chris is a former product manager from MakerDAO, now called Sky. And I think like the way that they approach building and setting up the Lazy Summer protocol and SummerFi in general is quite interesting, right? I think, often founders come from a lot of different backgrounds, but, listening to someone who is so deeply involved with the product side of things, I think was a lot of great insights.
Yeah, I agree. I think that was one of the interesting parts about the conversation and having Chris on, which is like viewing things from the UX lens. I think, of course, we have a lot of podcasts, we have a lot of different resources viewing things from the lens of the tech side, but also there's the most important thing here and what we're trying to push forward over the next few years, especially in DeFi, is user experience, right, and usability, and just trying to actually onboard more users. So yeah, it was very interesting to get him on to speak a little bit about the journey of like speaking to these users they have and kind of what do they want and kind of how that influenced what they've helped contribute to with the launch of the Lazy Summer protocol. And of course, we touched governance because we're fond of governance as a team. And so, yeah, it's interesting to kind of note the setup that they have for governance, the inspiration. He spoke a little bit about where they got the inspiration for the setup over there. So it'll be interesting to see how that plays out. And of course, we are delegates there. So if you're listening and you're a Summer token holder, please delegate to us. We'll greatly appreciate that. But yeah, we hope you enjoy our conversation with Chris Bradbury. Welcome to the podcast, Chris Bradbury.
Hey, great to be here. Thanks very much for having me.
Awesome. Excited to get you on. I know you just recently launched Lazy Summer protocol. I think we could start first actually with the founding story of Summer. Take us back to the journey of initially breaking off from MakerDAO, your Oasis, and then SummerFi. So yeah, maybe just for our listeners that maybe don't know too much of that back history, maybe just remind our audience, what was that initial journey like?
Yeah, of course. So yeah, you mentioned the first bit really, which is originally we were called Oasis.app. And yeah, we created the first version of Oasis.app back in the Maker Foundation for the launch of multi-collateral DAI back in 2019. I think it was, first deployed back in September, October time of 2019 for the launch of multi-collateral DAI in November. And and then kind of that was the default front end to access multi-collateral DAI. At that point, it just had the standard maker vaults and so on. It was pretty simple, basic functionality back then, but obviously, it was the main way to access the maker vaults and so on. Fast forward to like kind of 2021, the Maker Foundation has kind of delivered on its goals of delivering the Maker protocol and delivering all the functionality it needed within the foundation, and it handed the protocol and kind of all of the kind of community assets over to the community. But yeah, at the time, Oasis.app, it was obviously just front end kind of app and needed to be run from some sort of entity and so on. So yeah, that was spun out into its own entity. So we spun that out. That was about I think 15 of us from the Maker Foundation that carried on that kind of journey all the way up until summer of 23, where we rebranded it to SummerFi. At that point, kind of between 21 and 23, we added new features, but we started to introduce more functionality of DeFi into that, like adding new protocols to it and so on. But we always had that connotation with Maker, like we were still kind of, you're the Maker guys, you're the Maker team, or whatever, you're the Maker front end and so on. And that was the big reason for kind of branding it over to, or rebranding it to SummerFi, to kind of put a line in the sand and say, like, we're a DeFi front end and not the Maker front ends. At that point, And then, kind of late 23, early 24, we started to talk about the concept of yield. We've always kind of prided ourselves as being kind of one of the best places to like kind of borrow and earn on your crypto and DeFi and so on. Like we were one of the first ones to have all the kind of yield loop strategies, like the one-click yield loop strategies, whether it was Maker, it was like kind of Aave, Spark, Morpho, whatever. Like kind of, they've always been some of the most popular products we've had on that app and so on. But it was always difficult to use and so on. So kind of fast forward to like kind of late 23, where we first started talking about this kind of like this new yield protocol using the tech stack that we had and the experience that we had to build the new kind of lazy summer protocol. We developed and so on. And then it's recently been launched. With the lazy summer protocol is a completely new kind of face of SummerFi and the new app. And kind of first time doing the dark mode, which I know a lot of users have been asking for a long time.
Thank you.
But exactly. Yeah, like it was always something we pushed back on for a long time, and so on. Of like the kind of like more pro feel of the app and the sophisticated nature of it, and so on. But it's a much more kind of app for everybody now. All the functionality that you've had as a user since like 2019 is now under the pro.summer.fi. Kind of banner. That app's staying there. That app's not going anywhere. So that kind of takes us from the journey back from like 2019 and all the way to here.
And so in regards to like the initial version of Summer, there's like a lot of talk about kind of like DeFi front end. So you say kind of like it eases the access to the protocol, like the UX, but you guys also do quite a bit more than just that, right? And then maybe can you also just tell us what is kind of like the market share of Summer right now? What is like your TVL, user numbers, things like this?
Yeah. So for the main kind of what we call the pro app now, I mean, it wasn't just UX. Like we built that kind of nice UX on top of it from our point of view, but a lot of it just came down to the contracts behind that allowed you to do multiple actions in one transaction, basically. So the yield loops were a fine example where you can get like the kind of the most popular product we had was like 8 or 9x yield loop on wrap stake teeth, for example, in Aave, when that was like kind of the prime product for a while. Like that would take you maybe 15 transactions or so if you wanted to do that manually and so on across multiple different apps. And for us, it was a single approval and then a deposit, and you just took it to there. So that was kind of really nice. The other next bit was the automation. So we have all the automated vaults. So almost any position on Summer up to like kind of I think less than like 10 million. And so you can add automation on, which is either like kind of most popular one is stop loss. For us, it's kind of the no-brainer for most users in a way. Like nobody wants to get liquidated. Nobody wants to like be on a plane or something like that, and then like see the market had a huge drop while they were completely like inaccessible to their like computer and so on. So you put a stop loss on. Like I think the app stop lost me about 4 times on my own vaults and so on. So I'm like been a heavy user of it, or maybe too conservative. I'm not sure, but so they've got those, and then they've got like the auto buys, the automated take profits as well that were pretty popular, particularly when the market started to rally, kind of towards the end of last year and beginning of last year as well. Like kind of very popular products. That's those ones, and that kind of has a huge amount of dollars being managed through the app. It's not really TVL because you're never locking any dollars into the SummerFi contracts at that point, except maybe automation, which has around 300 to 400 million, depending on where the market is kind of protected at any one time. The actual app is, I think it's between 4 and 5 billion at the moment for the SummerFi app that's being managed through that. That's the total amount of collateral being managed through it. It's not from a huge amount of users. There's only, I think, like 1,500 to 2,000 users at any one time, like with open positions on there. Like it's got many thousands of users kind of in the last year and so on. But typically users are opening it for sometimes quite short periods of time and so on. But it's a very sophisticated app, and you typically need quite a few dollars to even get started and open a position, because they're like kind of the multiply positions or the yield loop positions. Like the gas cost, particularly if you're on mainnet, very, very quickly can eat into your positions. And because there are the multiply positions, you can earn more, but you can lose more quickly as well. They are more sophisticated products, and again, that's why we've looked at like the lazy summer protocol that is it's built for everybody, basically, because you can get started with like $1 if you want to on Base and Arbitrum. If you use the kind of email or social or passkey sign up, the gas is free as well. You can buy with Transact on the app. So yeah, it's a kind of like completely different style app, and one of the reasons we've kept it so separate. But yeah, it's hopefully going to grow to the same numbers as the current SummerFi front end over the next few years.
Chris, I know you're a product guy, and you kind of touched on it here. My next question, which was going to be like, what were the type of users, pre Lazy Summer protocol? What were the type of users you were seeing, interacting with, that led you to kind of ideate what has now become Lazy Summer? Like, what was the motivation? What was that kind of those lessons, those learnings that you saw speaking to these users, seeing how they interacted with SummerFi that led you to want to develop this vision and this Lazy Summer protocol?
Yeah, so the current users that we had on the old app are like, we internally described them as semi-sophisticated DeFi enthusiasts. So these are people that know what they're doing. Obviously, had a non-custodial wallet. Like, we never planned or ever expected to ever kind of onboard someone from the street into the current the kind of pro SummerFi app. Like, it would have been a huge leap. Like, it was like the kind of typical user would have maybe started using like crypto on a centralized exchange or Coinbase or something. Maybe they want to dabble in DeFi. Maybe they've like put it into like a Coinbase wallet or a MetaMask wallet or something like that. Maybe tried Uniswap, maybe bought a meme coin or two and so on. But like it would be a very big step to them come into Summer. Like, a lot of the users that we have are sophisticated kind of crypto traders in a way, or they're like kind of DeFi OGs as well. So we have a number of users that have got like kind of wallets that are funded like 5, 6, 7, 8 years ago, and so on. Like, there's some very old users on there. There's very new users as well, but we typically they're more sophisticated. And then kind of taking that journey down, or well, before we kind of go down that journey, that user group, although they have a lot of money, as you can kind of see in that $4 or $5 billion being managed on there, the money amount is very large, but the number of those users is very small. So it's never going to be an app where you're onboarding like 1 million users to it or anything like that. It's a very niche and small group of users with a large amount of capital. What we're trying to do with Lazy Summer is the polar opposite for the majority. Although in some cases, or in some cases for those sophisticated users, it's still incredibly valuable. And how we actually developed a lot of the ideas. So we know that on Summer Pro, a large part of the use case that people use the borrow actions for is doing like automated or doing carry trades effectively. So they're borrowing on Summer from their like ETH or BTC positions, and then depositing the like DAI or USDS or USDC or whatever into yield positions on within DeFi, whether that's through Summer on the yield loop positions or it's through other DeFi apps and so on. But what's very difficult there, and we continuously got asked if we could create kind of carry trade vaults and so on, or make it super easy to do carry trades on Summer. And we worked on the designs, like we worked on multiple designs. We looked at the flows and so on. And in reality, it was extremely hard to do in a cost efficient way for the user, because as a user, you continuously have to rebalance. So the rates are changing quite often, both on the borrow side. So the amount you're paying on the borrow side, like kind of ignoring Maker or Spark in some ways, it's just fairly fixed on there, but sometimes higher. Like it's continuously like changing and so on, and then the yield you're getting is also continuously changing, and you can very quickly find yourself like more than half the time making a loss instead of making profit, which can very easily turn into a loss throughout the kind of positions kind of lifetime as well. So like the first task for us really was to solve it on the yield side. So if people want to continue using like Summer to borrow against their ETH or their BTC or so on, and then they can just deposit that stable coin straight into a vault, which they know is continuously rebalanced. So it's great for the user with like $10, $20, $50 that wants to try it out and just earn a better yield instead of just depositing into like Aave or Morpho, which sometimes might be the best yield, maybe not always the best yield and so on, but also they're 100% exposed to it. Like we've also got these big users with like millions of dollars or whatever that can deposit now into the Lazy Summer protocol vaults or the Lazy vaults. And they know that their yield is continuously being rebalanced not always as well to 100% exposure. Like we have Block Analytica doing the risk management for the protocol, and they've set maximum caps, which kind of vary from around 25% up to, I think, 90% in cases. So what you're getting there as a user is you're getting the best risk-rated reward available in DeFi at any one time, and so on. So most users and bigger users as well are not putting all their money in one single protocol. Like we knew that from speaking to them. They have a diversification strategy just to make sure all their eggs are not in one basket, like any kind of sensible trader and so on. And that's exactly what the lazy vaults do as well. So wherever the best yields to be earned are at the kind of like diversified rate as well. So it isn't just going to split your money evenly. It is actually kind of like using the parameters set by Block Analytica and getting you the best risk-weighted reward at any one time. So each vault has different risk parameters depending on the kind of like, okay, how trusted is the vault? How much TVL does the vault have? How much Lindy effectively does the protocol have as well? If it's a super new protocol, then it obviously isn't going to allow for much exposure. If it's an old protocol like Aave V3 and so on, it's obviously going to allow for a much greater amount of deposits to be taken into it at any one time. But yeah, it is those users that like at either end of the scale that are doing that. And yeah, it's going to come onto it maybe in a little bit, but hopefully in about 4 to 6 weeks, we'll actually have kind of a more advanced lazy vault available, which is an automated carry trade. So from a user point of view, you won't even have to go and deposit your ETH or BTC into somewhere like Summer or another DeFi front end to borrow against it. You will actually deposit your ETH or BTC into a lazy vault that will automatically borrow against it, maintaining a kind of consistent TVL and supply the yield to one of the other like kind of stable lazy Summer lazy vaults. If there's profit to be made. If there's not profit to be made, then it will just take the ETH or the BTC that's in the deposit vault and deposit that somewhere like Aave and so on. But it will continuously rebalance on the borrow side. It will continuously rebalance on the yield side. So it means that from a carry trade point of view, you're always going to be in profit because it will instantly rebalance out if there's not profit to be made. But two, it will always be maximizing the profit again at that risk adjusted level that's possible to be made. So like, and that has very much come from the existing users of the SummerFi Pro app. Like that's not kind of like ordinary people on the street asking for like automated carry trade vaults. That is 100% come from the users that we've got already that literally solve the use case that they have today. And from their point of view, it doesn't just earn them better yields, but it saves them a lot of time and it saves them a lot of cost as well. Because again, the time is a big one. We know a lot of these users have like massive spreadsheets and so on. So it's a huge time and cost saving, as well as making hopefully better yield on there.
Before we dive even deeper into kind of the architecture, which you kind of started to outline there by answering the question about users, I do want to get into kind of like at a high level so our listeners could kind of go through it, because I think there's very interesting kind of new primitives you're introducing here. You mentioned the lazy vaults. There's also AI powered keepers. But before I do that, I do want to ask like more of a builder question, just because I like to sometimes ask this for our guests that are like active protocol contributors. They help develop, a protocol primitive. Could you walk us through maybe a little bit behind the scenes, what it going from user feedback to ideation to light paper to protocol launch? Could you speak a little bit in terms of like team wise, kind of what it takes and kind of maybe some kind of little nuggets you've learned in that going through that whole kind of like transformation and kind of getting to launch an actual protocol? Because maybe people don't really appreciate or know really what it takes to launch a protocol. Maybe they think it's, I don't know, maybe they think it's easy. I'm not sure. So yeah, could you maybe expand a little bit of kind of that experience for you and your team?
Yeah. So it all starts really, I think, from user research and UX research and stuff. So we have someone in the team, Jordan, who was with us at Maker since 2018 and so on, as a user researcher and so on. So like in the old app, especially like day to day, like he is speaking to users, like performing like user interviews or surveys or whatever, like getting a ton of different like qualitative and quantitative data there to try and always feed into the product and so on. And as I touched on, like one of the big bits of feedback was always these carry trade users. So one of the big things that DeFi has always offered us is yield. Like everyone's always used DeFi for yield, pretty much since like MCD launch, right, with the DAI savings rate and so on. And we've had Aave and Compound around for a long time now as well. But yield has always been the kind of like the killer and most simple DeFi application that we've had, kind of even probably one up from like swapping for meme coins and so on. In some ways, like it's a kind of set and forget in most cases if you're fairly happy with the yield. So that like the yield was always something we were always trying to kind of like push for and improve on the old SummerFi app, and so on. But the more we spoke with users and so on, and the more we kind of learned around the existing users that we have, like we're doing like wallet analysis as well of our existing users and what other people are doing in DeFi and so on. There's obviously loads of tools and stuff now as well to be able to do that. So really, it's all kind of data driven. And again, like we kind of touched on it before, but like end of like 23 and so on, like kind of how we looked at this, and Arjun was kind of a big inspiration to start with, like kind of like mid 23 as well, where we kind of started to implement the Arjun vaults, where you had to pick each individual market and a price to lend your pool at. And that was obviously really difficult for any kind of user to do and manage as well. Like you were looking at that daily. And so now you were not only trying to manage like maybe your like multiply positions or your volatile asset positions on that were maybe going to be liquidated on one side. They also have this protocol now where you're lending money on the other side, but at a fixed price that could immediately turn into the underlying asset if you don't keep an eye on it and so on. And that was the kind of first bit where we're like, okay, we need to create some sort of like kind of vault, ideally, or something like that for this that automates that and keeps it rebalanced and so on. And that very kind of quickly then started to take us down the road, speaking to more users about the idea of it around, okay, that's great, but like I also want exposure to Aave and Compound as well. Like I keep majority of my money in Aave or Compound or Morpho now as well. So that bit there was the kind of the start of the kind of lazy vaults and the yield, like just trying to solve that yield to make it as easy as possible. And again, the gas fees are the killer for almost every user on there. Like if you remember in 2021, like gas fees were like 800-900, I think 1,000 at some points for Ingwe, and it was costing like $5,000 or $10,000 sometimes, like to do advanced complex actions in DeFi, and it was a killer. Like if you only come in and like if you have $20,000, which is a lot of money to the majority of people that we're trying to target and get into DeFi over the next like 10 years and so, and you're asking them to pay $5,000 or whatever for a transaction, like they're not going to use it, particularly if you're offering them like a 10 or 15% yield. They're never going to recover that in like for a long time and so on. So that's the kind of bit where it always starts at, that kind of user research, UX research and so on. Like you said, like I'm a product manager by kind of trade, really. So that kind of that data-driven intelligence is the most important bit really for that. But the key for the protocol really is like, and any product is you have to be able to solve a problem. Like if we can solve problems for users, then it should be a great product. And if you can make it really easy for them to use to help them solve that problem, then it should be really easy to sell ultimately then to them as a product that they want to and need to use and so on. So from that point of view, it was kind of, okay, we need to make it really easy for users to access the yields. I need to make it really easy and not have to check it every day, because that's kind of the killer with most DeFi, that you do have to check it most days yourself and so on. And we need to make it really cheap, if not free. And that was kind of like where it started and so on. But how that started, like back then, and even with the light paper, like I don't think even the light paper, we talk about the risk manager and the risk curator and so on. Like that came out and kind of came into it kind of a little bit later, in a way that once we put the light paper out there, started to speak to more and more users and so on, we started to get that kind of classic question of like, who's managing the risk? Because like we as a team have no kind of experience or no public experience or anything like that as managing risk for users. So users have always selected their own risk. They've always been like, you choose the risk you're most comfortable with and so on. So some of the first questions that we got immediately was like, hey, I'm interested, but who's managing the risk in the vaults and so on? So that immediately kind of took us down that lane, and kind of like where we looked at there, like you looked at Morpho, for example, like Morpho have the risk curator model and so on. Absolutely like awesome protocol that they've built out there and so on. They've got the risk managers for the different risk things and so on. And that, but still as a user, you're then, instead of kind of choosing your own risk, now you're choosing the risk curator that has their risk and so on. So you're still choosing your own risk in some ways, right? Because they've got 5 or 10 or 15 or 20 risk curators or whatever. It is the same with Euler now as well. Again, really awesome new protocol and so on, and like doing really, really well. But again, you've got this long list of risk curators and so on. So we quickly made that decision where it was like, okay, the lazy sum protocol will have one risk manager. So as a user, you are saying, hey, this is the person who is managing the risk. So when you deposit, you're kind of depositing into the lazy sum protocol, but in some senses, you're depositing into the strategy of the risk manager on there. So that's who you're trusting really with your kind of the diversification and the kind of yield growth in a way. But that was the one big question that we had to kind of react to very, very quickly, and actually created, like what you said, kind of this brand new like primitive in yield aggregation, really, that no one else has got, I don't think, yet, right? Where we've got a completely third party independent risk manager to the protocol, which is just then kind of held accountable by governance and so on. Which should, obviously, we can probably get to that as well, but like streamline governance a little bit as well, so we don't end up in the same situation as Maker, as having like kind of like risk votes, or like multiple risk votes every single week, or anything like that. So like that was a big thing. And then the final one is, and you touched on it a little bit as well, is the keepers, or the AI powered keepers that we've got, which are again are kind of another independent component of the entire protocol. So the protocol is made up of 3 key kind of modular components in a way. You've got the risk curator on one side, you've got the keepers on the other side, and then the actual protocol, which is then like DAO controlled from a kind of curating the best of DeFi, like what vaults are available, what protocols are supported, and so on. But the keepers can only rebalance the vaults against the values that are set and controlled on chain by the risk managers, and the risk managers can only adjust values that are set and onboarded by the DAO. So we have these 3 independent parties performing all the actions that don't have any overlap. The risk managers cannot perform any rebalances. The keepers cannot change any risk parameters, and the DAO cannot, and the risk teams cannot onboard any protocols that are not approved by the DAO. So there's like this kind of like checksum game across the entire place. And with all of that, the Summer token holders then just keep each party accountable for that. But what that also brings us is these vaults we have here are like publicly accessible kind of DAO vaults, basically. But with that architecture, one of the really exciting things we have with this is we will be able to actually deploy kind of like closed access vaults for different groups or institutions or anything like that. Maybe even like their own like fintech apps and stuff if they want them, where they might say, hey, we don't really want the DAO, like Summer token holders that don't understand our own risk kind of models, deciding what vaults we want. We want to control our own risk models, so we can deploy a closed access vault, for example, where their risk and compliance teams can onboard the protocols they're comfortable with. Their risk team can set their own risk vaults and so on. And then even within the vault can actually be whitelisted only for their users as well. So if they don't want to mix up their users' money and so on into anything else, so they know what at any time, if that vault has $10 million in it, that $10 million is all their users' money. That is a very easy kind of simple balance to keep, but they maintain full control over that. Then just probably with a revenue share then split to the protocol itself, and to the DAO for kind of providing the technology and probably using the kind of the new vaults and the new arcs and so on that are coming out of the DAO governance proposals and so on. But and again, that came out of having conversations with like kind of institutions and more Web2 style apps of their requirements of not wanting to kind of mix money around, but also like very few big Web2 companies are going to want to rely on anonymous token holders to control which protocols get added in. Because if we end up with like one day, like, hey, we want to release a higher risk vault and governance votes in this kind of like meme trading protocol that's got a high yield or whatever, like that's obviously entirely possible. But if we get a like very reputable Web2 company, like there suddenly has to remove all their users' money because they don't want their users exposed to this meme trading protocol, like that's not how we grow DeFi. So if we want to get to the kind of next 100 million users or billion users or whatever, we need to kind of have this modular approach that we've built, I think, that allows for different risk teams and different risk managers for different deployments to come in and have that. But for the DeFi side, the open, accessible side to anybody, be as super simple and as clean as possible on that. But yeah, ultimately to your question, it all comes down to talking with users and using that data to build something that solves the problem.
So you touched upon like a point here that I think I would like to hear like a little bit more about. And we often ask this question to people who has kind of like, come from Maker in the past. You also mentioned that, there's like these types of users, they don't necessarily want this like, anonymous DAO vote to basically, decide, what is like available in the protocol and which kind of like risk is there. So I know we were going to talk a little bit about like the governance before, but maybe you can talk a little bit about, what did you learn basically from the things and struggles that Maker had in governance and from your time there in designing this like new governance system? Because Summer's, governance is also, I think, like one of those where it's quite unique and it's quite different than like what we generally see in the market. And I think this is something we've seen from like a lot of the old maker people, is that, they're like quite open to like, experimenting maybe, or like, redefining how it is governance should be looking like. So maybe you can talk a little bit about that.
Yeah. So there's a number of protocols that we kind of use for some of the inspiration around the governance stuff. But yeah, I mean, one of the first ones was, I think Maker did a lot of stuff really, really, really well. And so on. And the kind of models they built and the access control they built, like kind of started off with kind of where we wanted that inspiration in some ways, where they have all their different mums in Maker, which is the different access points to all of the protocol. And the very, very kind of early vision was that each of those, like what they call mum addresses, could be actually kind of moved away from governance. So I think at the moment, almost all of it, at least in the early days as well, was everything was just pointed at the DAO, the governance kind of pause module or whatever. So everything went through governance, even though it had a very nice design where they could kind of like offboard like a lot of decisions to kind of like expert areas and so on that again were just then approved and kept in check by governance and so on. So that was something that I was like a huge fan of when that was all created and designed, and we were kind of building out some of the stuff for it. And like, I don't even remember the kind of famous kind of MCD charts now that I think like DC did back in the day and so on, right? But they had all those connections, but they just went into one, and it seemed quite a big waste and so on for that, and that's why we have the kind of like the risk manager that just has direct access to the underlying vaults to change the risk parameters. So again, if you look at Maker, there are risk votes every week, pretty much. There's huge amounts of governance fatigue. I actually think it's a lot less than it used to be, weirdly, but it's still kind of like multiple votes a week, changing risk parameters and adding this and adding that and so on. So like we took that bit of inspiration from there and like did that to try and reduce the need for governance votes all the time. So what we kind of say from a governance point of view is that the summer holders keep contributors accountable, and the risk manager, for example, is one contributor. At any point, if they overstep their line or start to not to perform or anything like that, summer token holders can just remove them from the kind of system as well. So that was kind of one bit of like taking that kind of like original design kind of ideas from Maker and actually implementing it. And we've kind of seen it used in some other protocols as well a little bit. Like we see like councils and so on assigned and things like that, and it has worked really well. Like even grant councils and so on in cases where they have been given just like kind of more free reign to say, hey, you're trusted with X, Y, and Z. Like you decide and so on, and it's worked well. And putting everything up to a vote is not what the kind of vision kind of was, I don't think, in Maker in the early days. Certainly when kind of we started first looking into it as well at Maker, like. The concept was maybe one vote a quarter, or like executive vote a quarter, maybe a couple of polls here and there to kind of do stuff, but it very quickly changed, and so on. On the other side of governance, then is participation and so on, where I think we've got something really quite novel, and we have this kind of decay mechanism, which is pretty complex, and I'm probably not necessarily the right person to talk about it, but I can certainly talk about it on a high level, and probably have some of the engineers tell me afterwards that it's a little bit incorrect. But ultimately what it is we looked at things like compound governance and so on. That's I think a great example where they have a huge amount of compound in the wild, and they've got some big delegates, but a lot of people have delegated to people that do not ever vote and so on, and have no voting history really at all. Like if you go to the compound governance page, you'll see that most of the top delegates have no voting record or no voting record in the last year or so. But they still continuously get delegated to, mainly because they've got the highest amount of voting power and so on. So they appear at the top of the page, but also they've got big names like A16Z and so on, who are just not voting, and a lot of the holders are not voting. But there's nothing to penalize the users for anything and things like that. And what that led to is just before Christmas or maybe November time, I can't remember when, but someone managed to get a vote through governance in compound without anybody really noticing. And I think it allocated a load of comp somewhere and so on. And it was a really prime example of like, if you just allow people to delegate their tokens to people that aren't really paying attention, these things can just go through and happen. So we have this decay mechanism where everyone has to be delegated to. So even if you're delegating to yourself, you have to be delegated to. But if you do not actively participate in governance, and I think it's measured every quarter It is. So every 3 months, it will automatically kind of look at like kind of your participation levels, how much you are participating in governance and so on. If you have missed votes and not participated on chain, we're talking about here, then it automatically kind of applies this decay mechanism to you. So as a delegate, you lose voting power and you will also lose voting rewards. But for those of you that are delegating to those delegates, you also get paid summer token rewards for delegating to an active delegate. And what will happen there is if you start delegating to somebody that is no longer active, your reward rate will very, very quickly start to drop away. So you suddenly won't be earning any summer tokens for your thing, but also your summer token voting weight for that delegate will also be dropping away as well. So that delegate cannot just come in like, and again, we've seen this in the past, like with Maker and so on, where someone came in, like hadn't voted for maybe like a year or 2 years or whatever, like, but they had a load of MKR and they suddenly came in and blocked a vote, and a pretty important vote that like, I think like 90% of people that did vote voted for in like real terms, but MKR weight wise was then defeated because they came in at the very end. So if you've got a delegate that just wants to sit there on the sidelines, maybe wait for a year or so and like kind of scoop up the summer tokens and then vote on something that they really don't believe in at the end and kind of block what the majority of summer does, they won't be able to because their voting weight will have probably dropped to zero by then, or like kind of maybe 50% or 20%. I'm not sure what the exact numbers are and so on. But their voting weight would have very quickly dropped. So they cannot come in and just vote on something and so on. And it works in both ways because users should have undelegated to them as well if they're kind of keeping an eye on it and stuff.
Yeah,
but
I think also it's like, one of the problems also with that is something we also talked about is kind of like, you also want to have some level of predictability in governance, right? And like the more, tokens you basically have available for voting that is not actively voting, it also creates these, scenarios where, when you say like someone who doesn't believe in something, I mean, maybe it's also just that, they got lobbied, right? And like, then you have like the important votes are like super unpredictable can be, because if you have like a lot of people lobbying all of this kind of like, dead voting weight, then you just basically don't really know how these votes will turn out, right? But if you have a big portion of the tokens actually continuously voting and participating, it's much easier to kind of like see who like the way that people vote like historically and which kind of like factions that they might be in, right? We talked with Greg last week from M0, Greg DePrisco, who also was a former Maker president. They also have like a penalty. And he's not the biggest fan of Maker governance, I would say. So they also have kind of like a penalty, and their voting participation is really good, right? They even had a vote with 100% participation, which I think is probably one of the first times we've seen this. So it seems like that this is something that I think like in the past was, I think like in the past we always theorized that like, either, giving too big of a benefit to vote or giving, like a punishment not to vote would create people who would, vote in not a good way because they might just vote just to pass the vote. But it seems like it's something that is kind of like, coming up again now because there is such a big problem with people not voting.
Yeah, exactly. Yeah. And and I think it's like two problems to solve on as well in that, right? Which is like, you obviously need to like, you need people to delegate as well. So not even necessarily vote, but people have got to be willing to delegate and then delegate to a active participant. But then you need delegates that are actually going to be active and voting and have a good voting record as well. And trying to combine those two. And like we looked at the M01 and I think like we even we had a conversation about the M01, I think kind of like quite early on last year, like kind of like Q4 time, right? Around that and how it worked and so on. And yeah, trying to find that balance as well between kind of like reward or penalty and kind of what's also the secondary effects as well on kind of market and liquidity and things like that. Because yeah, you have to be careful around like both on reward and penalty, you immediately penalize people then, regardless of the way if they're providing liquidity and so on. So governance has a job there to do to make sure that kind of like it balances it slightly to around making sure there's liquidity for the token eventually and so on. And people are not disincentivized from maybe providing that liquidity and so on, to also then still voting and things like that. So yeah, there's different ways to do it. And you can see why some DAOs have like gone down a route of neither to maintain kind of that balance a little bit easier, but then immediately struggle for for people even to delegate. And I think that's one big problem Maker's always had as well, right? Like it's always struggled to get people to delegate. It took Maker a long time to add delegation in to governance as well. And it required individuals to vote each time, which is obviously really tough. I think the most we ever had was really about 100 odd people vote at any one time, which is pretty crazy for like tens of thousands of holders or whatever. But yeah, I mean, like that's kind of where Compound works. Like tons and tons of people are delegating, but they're delegating to dead delegates, not dead, but like delegates that are inactive delegates, and so on. So yeah, it'll be a learning curve. It'll be interesting to see like how it goes and so on. And obviously both protocols, M0 and Summer at the moment, they're both pretty small. They're in the very early days and so on. So seeing how governance participation goes, if it gets to the size of like Arbase and Compounds and so on, that like we kind of use in those examples, then that would be a great kind of case study, I think, at that point, if they can reach the same sizes and then see how governance is kind of performing with the kind of like penalty / reward side of things as well. But yeah, and then the difficulty obviously is rewards can't last forever as well. So it's great for bootstrapping, but then it's, again, how is it going to survive post rewards in like 3 to 5 years or whatever?
So I want to keep diving deeper into Summer governance, but before we do, actually, just so our listener can continue tracking this conversation, there is the Summer token, right? Which I want to touch on, right? Everything we're describing here is kind of it's happening. It's through this Summer token, which was just recently launched. Could you please explain to our listeners kind of its function, its utility, and its role in all of this setup we're describing here?
Yeah. So the Summer token role is really to govern the lazy Summer protocol. So as touched on before, the lazy Summer protocol was just deployed in the last couple of days, and it's 100% kind of controlled by the DAO. So it was deployed obviously with some pre-configured parameters like the risk managers have already set, the keepers already set, and so on. So it was kind of ready to go. But now that the Summer token holders are in full control of it, and they effectively have 3 roles within DeFi, within the lazy Summer protocol. It's curating the best of DeFi, so adding and removing markets, basically, like which markets to add and which vaults to add and support and so on, like at different risk levels. We talked before about keeping contributors accountable. So whether that's to kind of the development side that we have like at SummerFi and so on, it's the keepers and it's the risk managers, so on. So keeping those accountable, plus anyone else that comes on board eventually, whether it's like kind of a grants team or whatever, like kind of keeping those accountable. And then finally, it's just allocating protocol capital. So the protocol charges a kind of 1% fee on all of its stable vaults and 0.3% fee on the ETH vaults on there. So the protocol is immediately earning money. And the protocol has, I think, about 30% of the total Summer allocation still as well to distribute to basically the community. So whether that's Summer rewards, grants, or whatever, like it has this big token treasury to then control. So as a Summer token holder, you are there to kind of like probably delegate. Like if you want to be a self-delegate or delegate for others, then obviously then you can get involved and vote and so on. For the majority of people like using the protocol who are earning Summer at the moment, the idea is for them just to delegate to an active delegate, like such a Stable Lab yourselves and so on, that are one of the key main delegates on Lazy Summer at the moment. But the Summer token beyond that at the moment has very little else utility-wise on there. So it's non-transferable, the token, until at least the 1st of July this year. And really the key reason for that is we see that as like a feature, not a bug, basically. So a lot of protocols, when they release the token as well, all the focus and sometimes kind of distraction is around the token price, liquidity of the token. What can the protocol do to prop up the price of the token and so on? Like we even see these conversations a lot with Maker and so on. Like what can the protocol do to push the price of Maker up and so on? Like what changes can be made? And that's really detrimental sometimes to that kind of key product point we talked about at the very start, which was the protocol has to solve problems for users. Like the protocol at the very start is not designed to make money for Summer token holders in that sense of like push the price up. Otherwise, we start to get competing kind of like product decisions and like both from a UX point of view and from a kind of like maybe a risk point of view as well. So if the best way, in our opinion, to build the best product, to focus purely on the problem solving and make it the best experience to use for earning a yield, is to take away that distraction of price and liquidity and so on, but still have the ability for the Summer token holders to govern the protocol and also have Summer token rewards connected to the protocol as well in there. From the 1st of July, governance is in complete control to vote to enable transferability if it sees fit. So like kind of what the imagination there for us really is that if the flywheel is going, the protocol is growing, it's kind of got there, it's kind of started to find that product market fit and so on. It's kind of making its kind of like name in the yield space, and it's kind of taking its place in a way. Then it will be a good time probably for like governance to be able to enable that transferability and so on. But hopefully there'll be a pretty kind of detailed conversation around that from like the very different participants, the different like delegates, particularly the bigger ones and so on, around if it's the right time or when is the right time to basically enable that transferability, that it can maintain maybe that distraction a little bit of what's going on, but knowing that the product has actually found its kind of place in the market. So for those that are holding Summer at the moment, they can stake them and delegate them. If you delegate, you can then stake. There are staking rewards in there for governance. I think it's around 60 to 80% at the moment on Summer tokens for staking right now. So that's pretty cool. There's still lots of Summer to be claimed from raise holders on the SummerFi app as well. And there's just been a forum post go up as well to enable the transferability of Summer token rewards on the Vault reward contracts as well. So with the protocol being deployed, they're all earning Summer tokens through the Vault reward contracts, but because of the non-transferability, they cannot be claimed right now. But there is a function to whitelist the any contracts for this thing. So I think the first vote that will happen in the protocol and the governance is Summer token holders to vote whether to enable this transferability. So all those that are using the protocol can claim the Summer token, can then delegate the token and stake it. And with that claiming, if they claim it on mainnet or Arbitrum, they'll be able to bridge it back to base as well to still do that delegation and so on. But it gives basically the protocol 6 months of like total kind of product focus for both its users, developers, and the DAO to really say, okay, the only thing we need to focus on right now is the protocol and solving those key problems.
Chris, so to clarify, there's also rewards for participating, right? Not just delegating, but there's also rewards for participating in governance for the people actively voting?
Yes. Yeah. It's actually another vote that we need to put up onto the forum on there as well, because it's not formalized yet. But we have the proposal and so on. And it just needs to be formalized because the delegates, it uses the kind of synthetic staking modules and so on. So it couldn't work in the same way as the delegate, like when you're voting and so on, work. So that will be more of a kind of like every 3 months or so, there'll be a vote to distribute the Summer tokens and so on to the active participants of how much they had staked kind of on a per block basis and so on. But yeah, that's the only thing that we couldn't quite like solve for in an easy scalable way and so on there with the current staking contracts and so on, and reward contracts we've got. So that is going to be kind of like the old maker way. But yeah, every month or 3 months, whatever governance kind of decides, again, those contracts are already whitelisted. So as soon as the Summer is kind of like added to them, then it'll be claimable by the delegates and so on. But yeah, there's effectively those kind of 4 key ways to earn Summer, which is use the main protocol, delegate to somebody, be a delegate, or continue to use the SummerFi Pro app and earn raise, which convert into Summer kind of every 3 months.
Chris, so to clarify, just really one last question on governance here. So of course the protocol launched with these integrations, right? Like you mentioned, Morpho, Aave. So there was obviously that was kind of agreed to as part of the launch, but going forward, can you clarify their governance is going to be the one to onboard potential new protocols and integrations?
Yeah. Governance is the only one now that can onboard new integrations and so on. So there is a couple of vaults as well, a couple of arcs. So from the architecture point of view, each vault contains a number of arcs. In each arc is like the kind of protocol market or pool kind of connector, basically. So from a governance point of view, they can add or remove arcs to existing vaults. They can also add new vaults if they want to. So if they want to add a new token, they want to add a new chain as well. It can add more chains. It can add more vaults. It can add more arcs and so on. So yeah, governance is in full control of that. Whenever it gets added by governance, it will likely like what we imagine the process will be is like anyone that proposes it, firstly, governance would express like a thing of like kind of likely to support or not. But the risk curator would probably be expected to say, hey, we would give this a positive deposit cap or not. Because if the risk manager is there saying, hey, we don't think we're going to like, we don't see this protocol as being a safe place for anybody's money. We're unlikely to add this protocol to the lowest risk vaults and give it a deposit cap greater than 0. Then there's kind of no point governance even going through the voting process at that point, right? And again, this is where kind of like the different independent entities come in really nicely into that model, because again, Summer token holders may be incentivized to add this protocol super high yield and so on. But from a user point of view, because it can like boost the returns maybe for the Summer token holders, but the independent risk manager is obviously there to, in some ways, protect the user in that sense. And they're kind of like, hey, like this puts users' money at risk or whatever. We wouldn't give any capital to it. And at that point, governance, if it gets really frustrated, can remove the risk manager and so on and appoint a new risk manager if it really wants to. But I imagine if that happens, there's going to be a big outflow of users and stuff as well, right? Because again, going back to the earlier point, as a user, you're kind of depositing into the security of the code base, but then the trust of the risk manager on there. And again, because we only got one risk manager, we don't have risk teams competing with different risk teams to potentially go for slightly higher like LTVs or kind of lower fees or anything like that. It's all fixed. But yeah, governance is in full control now. For wants to add new chains, new markets, new vaults. It's all up to governance and so on.
Awesome. I did have a lot more questions just because I think it's a very interesting setup you have here, and I did want to kind of share that with our audience. But I do want to call out the time. We do want to let you go soon, but just a couple more questions before you do go. What could people look forward to from Summer over the next 6 to 12 months? I know you just launched, but I mean maybe something to tease or maybe something to kind of point to or plug here.
Yeah. So we've got a load of functionality still to come on the actual app, like introducing like bridging, swapping, and so on the app, just to make it that little bit easier for users already. They can already cash in, but there'll be like a kind of cash out process as well, so be able to withdraw their money back to their bank accounts and so on through Transact on there that we already use. One of the big things from a development point of view coming, like I said, hopefully 4 to 6 weeks, is hopefully these automated carry trade vaults. So again, a huge part of the market, like billions of dollars is used in DeFi already for carry trades. Like it's a huge part of it because people don't want to give up their ETH and don't necessarily want to like kind of like leverage or multiply the exposure to their ETH as well at risk of losing it. So the best way to hold on to your ETH and BTC obviously is just to kind of borrow against it and earn a yield there. So those markets will hopefully be coming online in 4 to 6 weeks ish. And then one of the big things for us as well, and one of the big aims for this year, is to basically, at the moment for this first version, you still like have different vaults deployed on different chains and have to select the chain you want to deploy on and so on. When we talk about onboarding the next like 100 million people or whatever, that's like we have to like solve the chain abstraction and so on. And again, with this modular approach we've got, like we've already got kind of like the theory in mind on how to actually communicate and move assets between these vaults on multiple chains and have a kind of bridging vault that sits in the middle. So the rebalancer then will be able to bridge. So you won't just be exposed to, say, picking at the moment, say, oh, I want to be in USDT, but the base one is best, or the Arbitrum one is best at the moment. Oh, now the mainnet one is best. I need to bridge over and move back to mainnet or whatever. You'll be able to enter and exit on any chain, and it would just rebalance across all chains for you and so on. So that's the really big thing for us of like kind of chain abstraction, and that for us solves the biggest like UX hurdle we've ever had in DeFi since L2s and stuff came online in Ethereum, where now there's so many different chains, so many different options, balances across all over the place. So if you can imagine that you're depositing, doesn't matter what chain you're connected to, if it's a supported chain, you can just deposit on one chain. If you're connected to another chain another day, you can withdraw on that chain as well. And it will earn you the best risk-adjusted yield from across the kind of like all the chains, basically. And that for us is like the kind of killer piece in the UX puzzle at that point. And hopefully what as well, at that point, that puts us on a path then to kind of also non-EVM standard chains as well. So kind of bridging out to the slightly wider ecosystem then as well, beyond just Ethereum and the kind of same protocols on the different networks and so on. I think we want to see like Web 2 adoption and so on. We then don't have to kind of like go to some of these integrators and say, oh, hey, we're on this chain, because it can be, if they already have started to implement something on a chain, then hopefully we can just plug this into whatever chain they're on. They can do their deposits and withdrawals on that chain, but it will give them access to the best kind of highest quality risk-adjusted yields that are available on the market.
Love it. Keep pushing DeFi UX forward, Chris. We need it badly. Awesome. Where should people go to learn more about Summer?
So it's exactly the same website as before, just Summer.fi. If you were using the old app, any favorites or like links and stuff you had stored will still take you to the kind of the new old app now. That's at pro.summer.fi. Again, that app isn't going anywhere, but the new app what I think is probably one of the cleanest UX experience in DeFi now is just at Summer.fi. And go check it out.
Awesome. Gustav, any final thoughts or parting words of wisdom?
Yeah, just want to thank you a lot for coming on, Chris. I think, what you guys are doing at Summer is really interesting. And, we are very excited to continue to follow your progress and, of course, also participate in your ecosystem. So good luck with everything.
Yeah, no, thank you so much. And like I said, pleased to have you guys as delegates and so on there. And pleased to see you guys as one of the biggest as well. So, it's been great talking to you guys. It's been really fun.
Thank you so much for joining us today, Chris.
Yeah, thank you.
Thank you as always, Gustav.
Appreciate it.
We'll see everyone on the next episode of StablePod.